Hello everyone, myself Jalpa Shah. Let me introduce myself to you. I have experience of 10 years to teaching to undergraduate student. Today I am here to explain you about income from house property. Yes, this is one of the 5 heads of income tax, right? We have already studied some heads of the income, right? So today we are going to study income from house property. Okay, so before moving to our session, let us see one nice thought and then we'll move to the session. Okay, so let us start with that. So here is your thought. Yes, what it says: if you want to fly, give up everything that weighs you down. Yes, what they're saying, that remove those things that pulls you down and make your life hard, right? For example, you can say that there are few things which you are afraid of and those things are pulling you down, right? So you should not give up, and what do you have to do? You should come up of that. Okay, that means if you want to achieve your goal, you have to let go the things, you have to give up the things that brings you down. Okay, so let us start with our session, that is income from house property, under section 22 to section 27. Okay, so here are, we have around 7 sections we have to learn. So one by one we are going to see that. So let us start with the basic sections. What we have here? Yes, here we have first is chargeability section 22. That is basic of charges, right? That is basic chargeability under section 22. After that we have determination of annual value under section 23. Here we are going to learn about how we are going to calculate annual value for house property. Next is deduction under section 24. So here we are going to see about deductions what we are getting in house property. Okay. Next is amount not deductible under section 25. So which are not deductible amounts, that we are going to learn under section 25. Next is taxability of arrears of rent and unrealized rent, section 25A. So that thing we are going to see how we are going to do the effect of that arrears, okay, in case of income from house property. Next is taxability co-owned property, right? When your property is owned by 2 or more person, that is called as co-own. In that case, how we are going to do the calculations, okay? So that is under section 26. And the last section is deemed ownership, that is section 27. So these are the 7 sections which we are going to learn under the income from house property. Okay, so let us begin with our first chargeability section, that is section 22. Now the definition of the income from house property is given under section 22. So what it states, that annual value of the property considering of any building or lands appertaining thereto, of which the assessee is the owner, shall be chargeable to income tax under the head of income from house property. Now what they are saying here, that under section 22 of Income Tax Act defines the basis of charge of income under the head income from house property, right? So bases are considered under the section 22. Okay, in that they have given us the things which are there in income from house property. Okay, so let us see that in detail. So we are going to see chargeability section 22. Here we have to consider only three things that we'll see. First we'll see the SSE must be the owner. What they are saying here, when we are talking about income from house property, first thing we need to consider is what? That SSE must be owner, right? So whenever you are doing any calculation, first thing you need to check whether that SSE is owner or not. Now in SSE must be owner, here we have some more things also. Now there will be a dim owner. Yes, we can have that. Okay. So what they are saying here, in case of that, we have to consider it. Yes, what they are saying, that owner include deemed owner under section 27. Right? We have seen that section. Okay. So what they are saying here, so in case of chargeability section, we have to consider two things. Yes, we have to consider two things. That is SSE as well as deemed owner. That is SSE must be owner as well as deemed owner. Okay. Second, what we have is annual value of buildings or land appurtenant thereto. Okay. What they are saying here, that land or building, of that we have to calculate annual value. And third thing is what? Property not to be used for own business and profession, right? What they are saying here, property must not be used for own business and profession. Okay. Now see, in case of deemed owner, we are going to see the things in detail, but I'll just tell you slightly idea about deemed owner. Here we are going to see that person may not be the legal owner, right? Deemed owner means what? That if you are getting, like suppose a person is relatives are there, right? So in that case, they can be a deemed owner. But in that relative also we have some conditions, like it should be spouse, minor child, right? We'll see in detail afterwards in section 27. So let us move ahead. So here we are going to see the conditions for chargeability, right? So when we are talking about three things, that is SSE must be owner, building and land, building or land appurtenant thereto, and property not used for own business and profession. In that case, we have to follow some conditions. So let us see that we have three conditions. So that are SSE must be the owner of property including deemed ownership, right? We have seen earlier the same thing. So what they are saying here we have to consider that ownership will be included by both the things, that is freehold as well as leasehold, right? So two things will be considered here. Now, a person who owns building need not also be the owner of the land. Okay, that may also happen, right? So what they are saying here, land will be in the name of another person and the building is the name of another person. Okay, so what they are saying here, the person who owns the building need not also be owner of the land. Even what they are saying here, SSE must be the owner of house property during the previous year, right? What is the condition? He must be, that is SSE must be the owner during the previous year. Okay, now SSE must be owner, even what is included here? Yes, deemed ownership. That means owner or deemed ownership, deemed owner should be, what you can say? Yes, should be owner of house property during previous year. I hope you understood this point. Now moving to the next, we'll see there must be a building or land appurtenant thereto. Now what they are saying here, that means what? Appurtenant. You must be having this new word. Yes. So appurtenant means what? Pertinent or belonging. Okay, so what they are saying here, so building, you can say that building or land of, suppose we have a building. Okay, in that building we have some area, right? Like you can say we have some one kind of, like you can say we have play area for kids, then we have road for going car and all, right? So what they are saying here, so when you are having something extra area around your, what you can say, building, belonging to your building, pertinent to your building, it may be your shop, it may be your office, it may be your godown, anything, right? So what they are saying here, the things which are appurtenant to your building, that should be considered in this house property. Okay, and last point is what, the property must not be used for the purpose of own business or profession, right? That means what, a person who is owner, he should not use, yes, he should not use that property for his personal business and profession, that is for his personal business. Okay, that is not allowed. Okay, next we'll see, the next is, it is computation of GAV. This is the very important part. So this will help you to get your marks in your examination, because you have to calculate GAV always, right? When you want to find out the income from house property, you have to go through from some steps, right? Now in that case, you have to follow some steps, and before that we have to calculate what, computation of GAV. Now for computation of GAV, we have to consider 4 important things, okay, that we'll see one by one. Okay, so here are the 4 things we'll see, that is municipal value, fair rent, standard rent, and actual rent, right? That is actual rent received. So these are the 4 things which we are going to consider while calculating GAV. Okay, now first of all, we'll understand the meaning of these 4 terms. Yes, let us start with that. So what is the meaning of municipal value? Yes, now municipal value means what, municipal corporation decide one value of our house. Okay, that is called as municipal value. Moving to the next, that is fair rent value. Fair rent value means what, suppose if we are living in 101, okay, some other person is living in 102, 103, right? Same area we are having, right? So what they are saying here, the fair rent value means what, similar house, that is other house, and that value should be considered when we are calculating. Okay, so if we are living in 101, then what is the value of 102? That is also considered for, what you can say, that value will be that similar house. Okay, so that value we have to consider. Next is what, standard rent. Now in standard rent, we are going to see what, yes, Rent Control Act, they will be giving us area wise standard rent, that is our additional value of rent. Okay, that is a standard. Okay, that is called as standard rent, that is under Rent Control Act we are getting this standard rent. Okay, now actual rent received, that means what, if you have given property on rent, right, and whatever amount actually you are receiving, yes, whatever amount actually you are receiving from that person, that is called as actual rent received. Okay, so these are the explanation for your understanding purpose only. Okay, so let us move to the next. Now we are going to see the calculation part. Now here we are going to consider two things. We are going to compare the things, right? So we are comparing between the 2 things. Okay, now first we'll compare municipal value and fair rent value. Now out of that we have to consider what, yes, whichever is higher. What we have to consider, the amount whichever is higher, and that amount is called as what, RLV, that is reasonable lettable value. Okay, now that RLV is now considered for next calculation, that is standard rent. So RLV is compared with standard rent, and what we are going to consider here, comparing with that RLV and standard rent, we are going to take whichever is lower. Okay, so that lower amount is called as what, expected rent, that is ER, expected rent. Now moving to the next, ER is calculated, right? We have already calculated ER. Now ER is compared with what? Yes, actual rent. ER, that is expected rent, is compared with actual rent received. And we are going to consider here what? Whichever is higher amount. What we are going to consider? Whichever is higher. Okay. So here you understood these things. Okay. What we have seen here, that in case of municipal value or fair rent value, whichever is higher, and in case of RLV or standard rent, whichever is lower, then expected rent will get, and expected rent and ARR, whichever is higher. Now in case of ARR, we have some point to remember. Okay. Now here sometime ARR will be less, or sometime it will be more. That happens, right? Now suppose your flat is vacant for 1 month or 2 months, right? So you will be having less ARR. Yes. So what they are saying here we have to bifurcate that thing. Okay. So when actual rent received, okay, it is less than expected rent and greater than expected rent. Okay. So now we'll see that when actual rent is greater than expected rent and when actual rent is less than expected rent, right? Now when we are talking about when actual rent is less than expected rent, here we are having two conditions. Okay. When actual rent is less than expected rent, we are going to see two conditions. First condition is that when it is because of what? It is because of vacancy, right? So when actual rent is less than expected rent because of vacancy, that time what we are going to see? Yes, that time we are going to consider actual rent is GAV, right? So that will be our GAV. And in case of what? In case of actual rent is less than expected rent because of any other reason, then here we are going to consider expected rent as a GAV. Okay, what we are going to consider? Expected rent as a GAV. Now come to the another part, that is left hand side. What we have is actual rent is greater than expected rent, right? That means what? Whatever rent we have received, that is more than expected rent. Then what we have to consider? Whichever is higher. Whichever is higher. So that is actual rent is GAV. Okay. So again we are going to repeat the whole thing. Just listen that carefully. So first what we are going to see? For computation of GAV, what we are going to see? Municipal value or fair rent, whichever is higher. That is called as RLV. That higher amount is called as what? RLV. That is a reasonable lettable value. Moving to the next, we'll see RLV is compared with what? Standard rent. Now here we are going to consider lower value, and that lower value is called as expected rent. After that lower value we have got, now expected rent is considered with actual rent received, right? Here we are going to consider what? Whichever is higher amount. Okay, and then we'll get our GAV. Okay, I hope you got it. Okay, in some cases you have to see that when actual rent is less than expected rent, if that is due to vacancy, then actual rent is GAV, and if that is due to any other reason, then expected rent is GAV. Okay, so I hope you understood this thing. So let us move to the next. We are going to see determination of net annual value, that is annual value. Okay, now annual value we are going to consider for what? Yes, for let out property. For what we are going to consider? For let out property under section 23 subsection 1. So here we are going to see what? We have the formula. So determination of gross annual value. Okay, so that is called as GAV, what we have already learned. Okay, of that we have to deduct what? We have to subtract municipal tax paid by the owner during the previous year. Simply they have said what here? Out of GAV, see we got the GAV amount, of that we have to deduct what? Municipal tax. What we have to deduct? Yes, municipal tax. Now, important thing to note here is that when we are talking about municipal tax, they said something. Yes, that is, it should be paid by owner. And during the previous year, two things you have to remember. It should be paid by the owner and during the previous year. Okay. Now suppose if you can say example, if you have given your what you can say, if you have given your house on rent, okay, their tenant is living and tenant is paying your municipal tax. You have to consider here? No. You should not consider. Why? Yes, because they have mentioned here that municipal tax paid by the owner. Okay, only owner. We have to consider what? Only owner. Okay, so payment basis we are going to get the deductions for this thing. Okay, so these things you have to remember. So what we have said here, GAV minus municipal tax paid by the owner during the previous year is equal to what? Net annual value. I hope you understood this. So let us move to the next, that is annual value of two self-occupied property under section 23 subsection 2 and subsection 3. We have the two things together. Okay. So earlier we used to get only one house as self-occupied property. Okay. But now amendments had come. Now, so what they are saying, now we can have two self-occupied property. Okay, so this is a good thing. Okay, so let us see that what they have said here. First thing is, for own residence or unoccupied throughout the previous year owing to his employment, right? So what they are saying here, self-occupied property, what we are going to consider? Yes, that is own house. Okay, and that is unoccupied throughout the year. Okay, throughout the previous year. Second thing, business or profession carried on at any other place in a building not belonging to him. Okay, so what they are saying here, that where you are not carrying any business, if you have any business, you do that other place which is not belonging to you. Okay, so what they are saying here, that is called own house then, in short, right? So what they are saying here, business or profession carried on at any other place is a building not belong to him. Okay, so now in that case your annual value will be nil. What they are saying here, your annual value will be nil. Okay, so these are the things you have to remember. So what do you have to remember here? Yes, that for two self-occupied property, you can get the annual value as nil. So let us move to the next part, that is annual value of deemed to be let out property under section 23 subsection 24. Okay, so now what they are saying here, what is the meaning of deemed to be let out? Yes, deemed to be let out, that means what? Suppose if you are having you are having 5 houses. Okay, your own house. Okay, now if you are having 5 houses, obviously you are not going to get all the benefits of SOP there. Yes, now that time what government is saying, that you are getting only 2 houses as SOP, that is self-occupied property, and rest of the 3 houses, that is you have 5 houses, 2 houses are self-occupied, then rest of the 3 houses will be considered as what? Deemed to be let out property. Okay, so let us understand that. So if more than 2 self-occupied property are there, then annual value will be nil. We have already studied that, right? And next is what? The other property, right? That is other property. After that 2 property, what we have, that is called as deemed to be let out property, right? And here your expected rent will be equal to what? Your GAV. Okay, so let us move to the next, that is annual value, where the property held as stock in trade, okay, under section 23 subsection 5. Now what is the meaning of stock? You know that, right? Inventory, right? It is a business asset, we can say that way, okay. So what they are saying here, in that case also we are going to consider, yes, what they are saying here, if a property held as a stock, so you are having property in which form? In a stock form, okay, that is a stock in trade. So what they are saying here, in that case, whole or part of part of property is not let out. That means what? We have not let out, so that is with us only, okay. So what we can say, that it is unsold stock, okay. What we can say that in other layman language, you can say unsold stock that is lying with us still, okay. That is what whole or part of any property is not let out, that is we have not sold yet. And second thing is what? During the whole or part of the previous year, right? Now what they are saying here, during the previous year, if you have not let out whole or part of the property, which property? Stock in trade, then what you have to do here? You have to see one condition, that annual value of the property or part of the property up to 2 years from the end of the financial year in which certification of completion of construction of the property is obtained from the authority, right? So if you are having authority letter saying that your property is what? Yes, that it is certification of completion of construction, right? So that we are going to consider for 2 years, and then that will be considered as what? That annual value will be considered as nil up to 2 years only, right? That means what? If you have not sold anything and things are lying with you, okay, so you have not sold and they are lying with you up to 2 years, it is allowed that you can consider that amount as nil, that is your NAV, that is annual value, you can consider as nil, okay. So these things you have to remember. I hope you are understanding. Yes. Next, let us move to the next, that is deductions under section what? 24, okay. So deductions in case of income from house property we have under section 24, right? And deduction allowed from which amount? NAV, that is net annual value, okay. So let us consider here, we have seen earlier that we have two kinds of property, that is one is let out property and second is self-occupied property. So we are going to do the calculation separately for both the things, okay. So now in case of let out property, let us understand one by one. So starting with the let out property, here we are going to get the deduction under section 24A and interest on borrowed capital under section 24B. So we have two deductions under section 24 heading, that is 24A and 24B. Now in case of standard deduction under section 24A, we have 30% deduction, right? 30% of deduction of what? Yes, NAV. 30% of NAV we are going to consider under section 24A. In case of second, that is under section 24B, we are going to get fully allowed. That means what? Deduction will be allowed fully. Okay, so whatever amount you have interest amount, it will be fully allowed. Okay, so interest on borrowed capital will be fully allowed in case of let out property or deemed to be let out property. Okay, I hope you understood that thing. So let us move to the next, that is self-occupied property. Now in that case, we are getting what? Yes, we are getting the deduction for second one. What we are getting deduction for second one, that is interest on borrowed capital under section 24B. Now in that case we have to consider two things. Okay, so let us understand that things one by one. First is what? Where loan is taken for repair, renewal or reconstruction of house property. Now there may be n number of reasons for what we are going to take the loan. Okay, but here we are going to consider three things, right? 3R, you can say that way, that is repair, renewal or reconstruction. Okay, now when you are taking loan for this condition, that is repair, renewal and reconstruction, that time we'll see how much deduction you are going to get. So here we are getting maximum 30,000 rupees deduction. How much deduction we are getting? Rupees 30,000. Okay, now second thing is what? When loan is taken for acquisition or construction of house property. Okay, so here we are going to take what? We are going to take loan for big purpose, for acquisition of property or for construction of house property, right? In that case we have to consider two things. Okay, so that if loan is taken before 1499 or if loan is taken after 1499, right? So these are the two things we have to consider. Where? Yes, in acquisition and construction. I hope you are understanding. Okay, now if I have taken loan before 1499, then how much deduction I am going to get? Rupees 30,000. How much deduction is allowed? Rupees 30,000. And in case of the letter, we have to consider again one thing. Okay, that is, if acquisition or construction completed within 5 years from the end of the financial year in which the capital is borrowed, plus what we need again the certificate from the lender specifying interest payable. Okay, so here we are going to consider what? If you have taken loan after 1499, then you have to see this condition. Which condition is there? That your acquisition or construction must be completed within 5 years, right? At the end of what? Financial year. Plus what you need? You need a certificate. Okay, certificate of lender specifying interest payable. Now in that case, suppose 5 years completed, if it is yes and if it is no. If it is no, then maximum 30,000 is allowed, 30,000 rupees allowed, and if it is yes, then you have to pay, you are getting 2 lakh deduction, right? Sorry, what you have to what you are getting here? You are getting 2 lakh rupees deduction. Okay, so I hope you understood this whole chart. Okay, I have tried to simplify this. Okay, so let us move to the next. Few notes we have to consider here, and these are the things we are going to see when we are going to solve the sums. Okay, so let us begin with the first, that is pre-construction interest allowable as deduction in 5 equal installment from the previous year completion of the construction. Okay, so these are the things you have to remember. That means what? See, normally what they are saying here, pre-construction and post-construction period will be there. Suppose you can say example that you have taken loan, okay, and in that period you can say 1/10/19 you have taken your loan. Okay, now it is completed by 30th June 2020. Okay, now in that case, see what is our year end? Yes, that is 31st March 2020. So up to that period, that is called as what? Pre-construction period. That is what they have said here, previous year, right? Previous year we have to consider, and after that it is called as post-construction. Okay, so I'll tell you all the things in detail at the time of solving the sums. Okay, let us move to the next. In case of self-occupied property, the total interest including pre-construction interest cannot exceed rupees 30,000 or 2 lakh as the case may be, right? Whatever case will be there, you have to consider 30,000 or 2 lakhs, including what? Including pre-construction interest. Very important, okay? Next thing is what? If a portion of the property is let out and a portion of property is self-occupied, then the income will be computed separately for let out and separately for self-occupied portion, right? We have seen earlier that if it is, see if you are having one property and part of that is let out and part of that where you are living, okay? So where you are living, that is called as self-occupied, and whatever you have let out, that property is called that let out property. So both the calculation you have to do separately, okay? So let us move to the next, that is inadmissible deduction under section 25, okay? Now inadmissible means what? That is not allowed, okay? Deductions not allowed. Now when it is not allowed, yes, say interest chargeable under this act which is payable outside India, okay? It is not for inside India, it is for outside India. That means what? Interest we are charging under this act which are payable outside India, okay, shall not be deducted. So we are not going to deduct. When? Yes, there are two cases. First is when tax has not been paid or deducted from such interest, right? Now what they are saying here, see, we are charging interest, right? Outside India, obviously we are going to charge, but if you have not paid that tax or deducted from such interest, okay? And second thing is what? There is no person in India who may be treated as an agent, okay? So what they are saying here, if you have done payment, NRI ko, if you have taken loan, okay, and NRI ko payment kiya without deducting interest, then Indian will not take deduction for these things, okay? So let us move to the next, that is flexibility of recovery of unrealized rent and arrears of rent received under section 25A. So let us see that what they are saying here. Unrealized rent means what? See, unrealized rent means what? Which we have earned but not received, okay? We have not received yet, but we have earned that, okay? So what we have to see? We have to consider three things. Now see, taxable in the year of receipt or realization. So what they are saying here, that when we are getting our unrealized rent, right, we are receiving that point of time, it is taxable, okay? Arrears of rent received, that means what? Whatever we have earned but we have not received, but now we are receiving. So when we are going to charge that? Yes, whenever we are receiving, okay, that period, on that time we are going to tax that, okay? Next thing is what? Deduction at the rate 30% of rent received or realized, obviously. So normally, see, when we are computing our income, we are going to consider rent, right? That is our income. Now on income we are going to get what? Deduction of 30%. So same we are going to take here also. So whenever we are receiving our rent, we are going to take deduction of what? 30%, okay? And last one important thing is what? It is taxable even if the SSC is not the owner of the property in the financial year of receipt or realization, okay? So what they are saying here, suppose I have given my house this year to any other person, I have sold, okay? Now in that case, the earlier person who had not given me rent and now he is giving me the rent, but now I am not the owner, but that was arrears, right? So that arrear I have to consider, I have to take, and I am going to take that, though I am not owner, and that is taxable. Got it? So let us move to the next, that is co-owned property under section 26, right? What is the meaning of co-own, right? That is two or more person who are sharing the property, right? So they are also owner of that property. Yes, so what they are saying here, that is called as co-own property. Okay, now here also we are going to consider two things, that is self-occupied and let out property. So in case of self-occupied, what we are going to consider, the annual value of the property of each co-owner will be nil, right? Will be what? Nil. And each co-owner shall be entitled to a deduction of rupees 30,000 or 2 lakh as the case may be on account of interest on borrowed capital. Now what they are saying here, see, if two or more person, they are holding one property, okay? So if two or more person will be there, obviously they will all will be getting the benefit of what? Income from house property. All will be the getting deduction, and they are going to calculate everything separately. Okay, so that is the important part to remember. Okay, next is what? Let out property. Now in let out property, what we have to see, the income from such property shall be computed as if the property is owned by one owner, and thereafter the income so computed shall be apportioned among each co-owner as per their specific share. So what we are going to consider here, we are going to divide the things according to their share, right? We are going to apportion that, the amount whatever we are earn as an income, right? And then we are going to divide that according to their share. Okay, next is what? Deemed ownership under section 27. So this is what you have to understand. Here we are going to have 5 things, that is in that 5 cases we are having deemed ownership. That person will be called as deemed owner in these 5 cases. Okay, so let us understand one by one. So first is what? The transferor of the property. That means what? A person who is transferring his property to another person. Okay, that is not as a gift. Very important. Okay, where the property is transferred to the spouse not in connection with the agreement to live apart. That means what? Living separately. Suppose that person is taking divorce. That person is like living separately. Then it is not allowed. Okay, or minor child except minor married daughter without adequate considerations. This is your first thing. Second thing is what? Holder of an impartible estate is deemed to be the individual owner of all the properties comprised in the estate. Now what they are saying here, the person who is holding the estate, okay, is deemed to be individual owner of the properties comprised in the estate. So you can take example here, HUF, right? In case of HUF, the Karta is the owner, right? So he will be holding that property. The rest of the people who are having, in his family, now they are considered as what? They will be considered as a deemed owner. Okay. Next is what? A person having lease right property for a period not less than 12 years. Okay, now you can say that where if a person has taken property on lease, right? So now he is going to extend that property. Okay, then you can say example, suppose he has taken for 1 year, then 2 years, he is going to extend that limits. Okay, so that time he is called as what? Deemed owner. Okay, that is not less than 12 years. Okay, next thing is a person in possession of property in part performance of a contract under section 53 of the TOPA, that is Transfer of Property Act under section 1882. What they are saying here, that if a person is having possession of the property, okay, under this act, and after that, suppose you can take example, that person is possession of property in part performance, he did part of the things he have done, and part is remaining, right? Then what they are saying here, then that is called as what? Deemed owner. Okay, that is he is occupied that what you can say, a property, only a part of that thing. So you can take example, if I am having a building and out of that building I have given one flat on lease. Okay, now in that case the person who is holding that lease property, sorry, that what you can say, that property, so that called is what? Not on lease, I have given on that what you can say, for possession, that person is taken possession. Okay, and he is having suppose one flat in that building, then that he is called as what? Deemed owner. Okay, similarly in case of cooperative society, company or other association of person is deemed to be the owner of the building or part thereof allotted or leased to him under house building scheme. Now what they are saying here, same things are there, topa and this thing. What they are saying here, that if a person is having possession of a property, if I am having, or you can say, flat in particular building, then I am called as what? Deemed owner. Okay, so that's what they have said here. I hope you have enjoyed my session. So we have done with our income from house property, all theory part we have completed here. Okay, so next we'll see all the sums. Okay, so thank you so much. Do subscribe my channel. I hope you enjoyed. Give comments and you can give me your doubts under the comments. Okay, thank you so much.